Dave's sitting at his kitchen table with a printed refund summary. $1,400. Same as most years. Then his phone buzzes. His mate Shaz says she got $310 more than last year, quote, for doing literally nothing. Dave frowns. Sounds like bulldust. See, Dave's routine every year is the same. He digs out his shoebox of half-crushed receipts. Boots, a phone bill, a couple of tools, claims around $600, and files on myGov in 20 minutes flat. Fast, familiar, and honestly, he's never questioned it. So when Shaz's text pops up, Dave's first thought is she's rorting the system, or just exaggerating over drinks. $310 extra for nothing? That doesn't happen to normal people. Not to electricians from Penrith who fill out their own tax return. But curiosity gets him. Dave opens his laptop and starts digging through the tax office's own guidance. Turns out Shaz wasn't lying, and she wasn't rorting anyone. There's a genuinely new rule coming. A flat deduction, no receipts required, starting next tax year. It's real. Dave's eyebrows shoot up. So does that mean everyone just gets $450 free next year? No questions asked? That's what half of Dave's group chat seems to think. But the fine print nobody actually reads tells a very different story, and it's about to matter a lot to Dave. Here's what it actually is. From the next tax year, you'll be able to claim a flat $1,000 in work-related expenses, with 0 receipts, 0 shoebox, 0 proof needed. For anyone who's ever lost a receipt in a glove box or a wallet, that sounds like pure relief. But here's the catch nobody mentions in the headlines. It's not a bonus stacked on top of what you already claim. It's a replacement. You pick one path or the other, your itemized claim or the flat 1,000. Never both. Dave's stomach does a small drop. Let's put the actual rule on the table so there's no confusion. $1,000 flat, no receipts at all, and it only applies from the 2026 to 27 tax return onward, not the one Dave's about to lodge. Simple on its own. The trouble starts when people don't realize it's an either-or choice. So what actually happens if you try to claim both on the return that finally qualifies? Dave's about to find out the hard way, because a year from now, sitting at his laptop, he almost does exactly that. Types his usual $600 in, then adds the new flat claim right underneath it. He's one click from submitting when something nags at him. 2 numbers, one for tools and boots, one for the new flat deduction, both sitting in his return like they're separate things. His pen hovers over the page. Something feels off, but he can't quite name it yet. Turns out that nagging feeling was right. Claiming your itemized deductions and the flat 1,000 together isn't extra generous, it's a red flag. The tax office cross-checks these claims, and stacking both is exactly the kind of discrepancy that triggers a please explain letter in your mailbox. Here's exactly why that happens, laid out plainly. If your return shows both claims sitting there together, the tax office's system doesn't see generosity, it sees an error worth checking. And checking means letters, delays, and a headache. Dave was one click away from creating for himself. So the real question isn't whether the deduction exists. It's whether you, specifically, come out ahead by using it. Am I one of the winners here, or am I about to lose money by switching? That depends entirely on a number most people have never actually added up. The formula is simple. Add up everything you'd normally claim without the new rule. If that total sits under roughly $1,000, switching to the flat claim puts more money in your pocket. If it's already over that, sticking with your itemized claim wins every time. Dave grabs his old receipts and actually tallies them properly for once. Boots, 1 work phone plan, a couple of small tools. It comes to about $600, same as always. Sitting there with the total in front of him, he finally sees where he stands. And here's the thing about Shaz's $310. It was never a universal number, it was just her number, based on her old itemized claim. Dave's shoebox, the one he's carted around for years, finally has nothing left to decide this time. The flat claim wins for him too. So here's the reframe worth sitting with. The problem was never that people don't know this deduction exists. Most have heard the headline by now. The real problem is nobody's told them it's a decision, one with a wrong answer that costs actual money either way. It's a decision trap. Pick wrong by stacking both, and you risk a discrepancy letter. Pick wrong by ignoring it when you qualify, and you leave real money on the table. Either mistake is quiet, easy to make, and completely avoidable once you know which side you're on. So that $450 headline everyone's sharing, it's only true if your normal deductions sit under about $550. For Dave, with $600 in real expenses, his honest uplift is $400. Smaller, but still genuinely his. So how does Dave actually claim it properly, without tripping the wire? When the new return opens next year, he logs in, and instead of typing his usual work-related expenses figure, he looks for the specific new label the tax office added just for this flat deduction. On the screen of next year's return, there's one clear field for it, separate from the old deductions section entirely. Dave deletes his $600 itemized entry, selects the new flat option instead, and the number on screen updates to exactly $1,000. Clean, correct, no overlap. He double checks it's the only figure in that section, closes the laptop, and actually feels good about it. No shoebox scramble, no guessing, and definitely no letter arriving in 3 months asking him to explain himself. Just one clean number, correctly placed. So what does this actually mean for Dave's future refund? On the return where it finally applies, his deduction goes from $600 to $1,000, a genuine $400 increase. At his effective tax rate, that turns into real cash landing back in his account, not just a number on a page. So Dave's refund is set to move from $1,400 to $1,532 once the new rule kicks in. Not the flashy $450 everyone's quoting, but honest, correctly claimed, and entirely his. Now it's your turn. Go add up your real deductions before that field opens.